Hey everyone, welcome back to Corporate Decoder. Today we are diving into a report about BlackHawk. It involves trust amendments and a surprising amount of talk about 1/5 of a right. Let's just say we'll be decoding some corporate gymnastics. Trust me, it'll be interesting. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. In short, BlackHawk Acquisition Corporation filed an update to its proxy statement. It's about a proposal to change their investment management trust agreement. The key takeaway? They are tweaking the wording to remove a specific dollar amount related to potential extensions. It's all about extending how long they have to acquire another company. BlackHawk Acquisition Corporation files paperwork that adjusted some language in the official documents that describe what they want to do with their trust. Let's unpack this. BlackHawk Acquisition Corporation is a special purpose acquisition company, also called a SPAC. These are basically shell companies that exist to buy other companies and take them public. This process avoids some of the traditional requirements and scrutiny of a regular IPO or initial public offering. The heart of this filing is centered on the Trust Agreement Amendment proposal. This is about them wanting to change their investment management trust agreement. Think of this trust account like a piggy bank where the money raised from the initial public offering is stashed while BlackHawk looks for a company to buy. The trust agreement lays out the rules for how this money can be used and when BlackHawk needs to make a deal or return the cash to investors. The main change they want to make is to allow them to extend the termination date. This is the deadline they have to make an acquisition. If they don't find a target by this date, the money in the trust account gets returned to the investors. They want to extend this termination date up to 18 times, each time for an additional month. This would move the final deadline out to December of 2026. To get these 1-month extensions, BlackHawk needs to deposit more money into the trust account. They need to add $0.033 share that was sold to the public in their IPO that is still held by investors after they made their vote. Essentially, they are adding a little more money to the pot to keep investors interested and give themselves more time to find a good deal. The change they made in this new filing supplement removes the specific wording that said they would pay up to $55,000 per 1-month extension. The old wording locked them into a specific maximum cost for each extension. The new wording ties the extension cost directly to the number of outstanding shares. The advantage of tying the cost to outstanding shares is that it scales automatically. If a lot of shareholders redeem their shares, the cost goes down. If not, the cost reflects the broader investor base. The company also issued a press release to inform investors about this change to their proxy statement. This is them being transparent and making sure everyone is on the same page before they vote. This filing of the press release is a formal action. It's a way for them to keep investors updated and to comply with regulations. Basically, it's making sure that investors know about the change before they vote on whether or not to let BlackHawk extend their deadline. Now, let's take a look at the financial side of things. Since this is an update filing, it doesn't include a full set of financials. However, there are a few important numbers mentioned that give us insight into the situation. Scroll units count, each consisting of 1 ordinary share screw. We can see listed the trading symbols for their units, ordinary shares and rights on the NASDAQ. And the units 1 share and a partial right trade under BKU Rufford. The ordinary shares trade under BKAGU and the rights trade under BK. This shows the different parts of the company that investors can trade. The ordinary shares are the basic ownership stake, while the rights give the holder a chance to get an extra share. We see that Kent Louis Kaufman is the Chief Executive Officer. This is who signed off on the report. So what does all of this really mean? The company is trying to give itself more time to find someone to buy so they can try to take them public. By removing the upper cost cap, BlackHawk is giving itself more flexibility in managing how much it will cost to buy more time. BlackHawk is requesting the flexibility to extend its search for a target without being locked into a specific extension fee, giving it more wiggle room. The change is designed to make it easier for them to extend the deadline to complete an acquisition. This gives them more time, but it is not without risk. If they keep extending and don't find a good target, investors might get impatient. The longer they drag this out, the harder it might be to find a company to buy at a reasonable price. This is a big step for BlackHawk. A lot rides on it acquiring a great company in a timely manner. Alright, that's our breakdown of BlackHawk's latest filing. What's your take on these changes and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.